morning. Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, March 26th. Another quiet two-sided trade here overnight as we get closer to the pause. Corn right now is mixed, within a penny of unchanged as spreads rebound a little bit. Bean complex also mixed, 1 or 2 better in the beans, a little lower in the meal, a little higher in the oil, while wheat prices are steady to 2 lower. In general, prices have been kind of grinding sideways to lower as we await the quarterly stocks and acres data from the USDA next Monday. The major wire services are out with their survey of estimates. U.S. farmer is expected to plant about 94.3 million acres of corn this coming spring. That is up nearly 4 million from a year ago. Bean acres are expected to slip roughly 3.3 million to 83.8 million. Wheat acres expected to expand about 700,000, largely due to higher winter plantings. Both spring wheat and durum acres are expected to be very little changed. March 1st stocks for corn expected to come in about 200 million below year ago at 8.15 billion. Bean stocks at about 1.9. That would be up 50 million from a year ago, while wheat inventories are expected to be up 125 million from a year ago at 1.215 billion. Speculative traders yesterday are believed to have been healthy sellers across the ag space, particularly in corn, unloading almost 10,000 contracts as they continue to pare back their long position here ahead of the quarter end and the U.S. planting season. We've got that long position now back under 90,000 contracts, which would be the lowest in 4 months. The speculative trade is short pretty much everywhere else. Beans short roughly 25,000 contracts. Chicago wheat nearly 90,000 contracts, 60,000 in the meal and about 30,000 in the soybean oil. Rains this week in the U.S. expected to be heaviest across the U.S. Gulf Coast and Delta region, stretching up through the central Midwest and eastern Corn Belt. More scattered in the west with even lighter totals in both the southern and northern plains. I would look for further easing of drought conditions across the central Midwest, while a little bit of an expansion of drought in major wheat growing areas. Ethanol production later this morning expected to slip to about 319 million gallons, down from 325 the previous week. South American weather is mostly favorable. Cooler, wetter conditions across Argentina over the next 7 days, perhaps to prove somewhat beneficial for their late developing crop there. However, that will also slow early harvest operations. In Brazil, weather is mostly favorable for the development of their second corn crop. Even some other drier areas in the deep south are expected to pick up some rain here over the next week. However, not likely to slow harvest down a whole lot. The soybean harvest, that is, given how dry it's been here lately. And we even have better prospects for rain across many of the wheat growing areas around the Black Sea. Inside trade for spot May corn overnight as it held a retest of last week's low at 455. Despite strong demand, the upside would appear limited with the expectations for much higher U.S. acres here this spring, while the second crop in Brazil is largely favorable. And beans, May continues to chop around this $10 level after making a new fresh 2-week low overnight, seeing a little bit of a rebound. New low for meal. Oil seems to be probing the upper end of its 41 to 43 cent trading range. Look for a significant drop in bio and renewable diesel production in next Monday's EIA update. In quiet trade here in the wheat market, as we've seen a 30-day ceasefire agreement in the Ukraine-Russian war. Thanks for listening, everyone. I hope you have a great day.